Thank you for coming to today's Online Trader Summit. My name is Jeff Gibby. I'm going to be kind of the master of ceremonies today. We have, like I said just a minute ago, we have a great group of speakers, and we're going to get straight underway. But first, let's go ahead and get to your favorite part of the day. Today's demonstration is designed to instruct you on Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. We've had a lot of questions already. The most popular question we get is, I can't stay all day, or are you recording the session, or when will the recordings be available? So let me answer that right away. We are recording all day today. What's going to happen is our video guy is going to take all 8 hours or whatever that we come up with, and they're going to put them up on our YouTube channel. It usually takes him a couple of days to do this. So by like Wednesday or Thursday of next week, what I will do, as long as you registered, is I will personally email you with the login link. So I do want to say a special thank you for coming. I love doing these full day events. They're very, very good. I hope you enjoy it, and I hope you get a bit of value for your day, to say the least. But they are the funnest things we do here, or at least for me personally. So thank you for coming. And special thanks to all the presenters that volunteered to give a part of their Saturday to come in and talk to us as well. They really are great people to work with. I also want to say thank you to Modern Trader. They're the sponsor of today's session. Modern Trader, if you're not aware of it, have been actually publishing magazines since 1972. They started out as Futures Magazine. They've been rated the best business magazine of 2017. They've got about 53,000 subscribers. And what they've done, regardless of if you don't do anything today, you can actually get a 4-month digital trial. And all you have to do is go up to, and I will paste this up in the link in or in the chat box in a second. But to get your 4-month totally free trial, no credit card subscription to the digital version of Modern Trader, you can just go to this website here. And I will actually post that in the chat in just a second as soon as I get Toni started. So, and thanks for coming today. We're Metastock. We're going to host the event today. Thank you for those of you that use Metastock. We're actually going to be talking about it all day today. And since we're starting about 3 minutes late, I'm going to kind of just go real quick to get Toni speaking. But we'll be talking more about Metastock as we get in today. My first guest is Toni Turner. Toni, I'm going to actually turn back on your microphone, and we're just going to talk a little bit. I've known Toni for a long time. And Toni, are you here?
Yes, I am. Thank you, Jeff.
I was going to say, how long have we known each other, Toni? It's been forever. For longer than we'd like to admit, I think.
Yeah, back Noah's Ark days, I think.
Back when we were graphing things on paper, maybe?
Right.
Okay, Toni does a lot of speaking. I met her, I think, initially at the Traders Expo. And she's just such a great person to work with, such a friendly person, and really knows a lot about the market. I've wanted her to speak for a while. I'm glad I invited her today. Toni, we can see your screen, and we can see your unmaximized PowerPoint.
Okay, so, I'm getting it in shape right here to go, Jeff.
Okay.
Just
right.
1 second, and it'll all come together. That
now, is there anything you have to say for yourself?
Yes, I have to say for myself that since I've returned from my ski trip, I've developed a dandy cold. So I wish to ask everyone to please forgive me if I cough. I will try not to cough into the microphone. But I have worked with Jeff for, as he said, a lot of years. Jeff is absolutely fantastic. He is very calm when things get hectic, which I admire in him. And I love working with Metastock. I love the software, and it's really helped me make money. So that's what I have to add today before I get started.
Well, I'm going to get out of your way. Let's go.
All right. Thanks so much, Jeff. Okay, you guys, I want to welcome you all to today's Metastock Online Summit. Fantastic idea. Jeff is really good at putting these on, and I think that you all are going to get a fantastic overview from different teachers and trainers today. I'm very proud and honored that Jeff Gibby invited me to be here with you. This is a real valuable day for you all, and I give you credit for being here on a Saturday when you could be out probably, depending on where you are, playing in the snow or going to the beach, right? So I give you credit for being here. And again, I want to thank Metastock and Jeff for putting this training on, because it's free. He's gotten some wonderful people in, and we'll have a good time. So I have a lot to show you. I've gotten a couple of minute late start here, so let me get going. And we're going to have the plan is that we're going to have time at the end for any questions you may have. Today, I'm going to talk about in the next hour how to power up your swing trading profits. Now, swing trading is one of the most popular forms of trading that we do as traders. Before, of course, I'm going to give you, let's give you 5 seconds to read the disclaimer. 3, 2, 1. You got it? Okay, good. Okay, let's look real quick at a definition of swing trading. And we do swing trading. When I started trading back, oh gosh, hate to say it, probably about I got in the stock market in 91. I started trading in about 1996. Swing trading was the most popular thing to do, because what it does is it keeps you in the market when the getting is good, and it gets you out of your trade or the market when the getting is not good. So with swing trading, you capture the swings, take profits from price upswings or downswings, typically on daily charts. So what you're doing is you're capturing the center out of the Oreo, we like to say. If the price is moving in upswings on the chart, you're capturing the center in the Oreo. So maybe you miss a little move down here, a little move up here, but you're generating profits from the big move. And then when the market went, and if it goes like that, you're not there. You're on the sidelines with your profits intact. Now, the benefit of swing trading is to be, as I just put here, is to be long or hold shares long in your account when it is trending higher, like this, or if it's moving lower. Today we're just going to talk about going long, or capturing and holding, getting the profits from this kind of move down. So to be long or short in a stock when it is trending higher or lower, and avoid the pullbacks or rebounds and consolidation. So again, you're in when the getting's good, and you're out when things aren't going as well. And that is the whole point of swing trading. It's a very popular way of trading in the market. And some stocks, you really do want to swing trade them. You don't want to buy and hold them because it's just too hectic. The average time in a swing trade, and this is what I learned when I started swing trading, what I generally did, the average time is, say, 2 to 5 days. But I added for longer, because when I'm teaching you our sleeping tiger setup today, your holding time for a swing trade can be much longer. It can be more profitable than that if you use the criteria and the strategies that I'm going to teach you in the next few minutes. Now, first of all, I want you to remember our goal before we go into the charts, and we will in a couple of minutes. This is, I like simplicity in trading. When I started trading, I did what everybody did. You start piling all of these indicators and analysis on your charts, and you pile it all on till you can't see a thing. And then they all start contradicting each other. And it gets really complicated. And then if you live through the first year of trading and you don't blow up your account like so many people did back in the 90s, then you start pulling off indicators saying, you know what, I really prefer just to look at price, because price is where the buck ends, right? So you start making things more simplified the longer you trade. And I have a very simple goal for us here for swing trading is we use the 8-day simple moving average. I always color it red on my charts. And our goal for each of our trades, and it's so nice to remember a simple goal when the market gets chaotic. Our goal is for our stock or our ETF to walk up its 8-day simple moving average. That's all we ask. And when everything gets really chaotic, you need to be able to think, why am I doing this? Where should this trade be? Where should it need to go for me to stay in it? Where do I need to get out? And if you look at it and say, okay, my goal is for this stock to walk up its 8-day moving average, period. And if it doesn't do that, I exit the trade. So let's look at, this is my sleeping tiger setup. This is a setup that I created back in the year 2009. Some of you may remember back that far with me when we had gone through one heck of a bear market. As you all remember, we had the financial meltdown. It was, to say the least, pretty terrifying. I had a hedge fund guy down the hall from me who would walk past my office every day, pure white, stick his head in, say the bond market just locked up, roll his eyes and stumble on down the hall. I had two guys like that on the floor of my office then. And I mean, we can't say we weren't scared. We were scared. But I thought, you know, nothing goes on forever. And I want to create a setup that I can use over and over and over again to bring home money when this market reverses. And the market did reverse. And it, of course, as you know, we've been in one heck of a bull market ever since. The sleeping tiger setup adapts to a lot of situations. We use it in Toni's Market Club, which takes place every Monday afternoon. And it's a 2-hour webinar. And we have used the sleeping tiger setup as our main setup. And since I've had a lot of the same people with me for 9 years in Toni's Market Club, I know this setup works and I know how much money we've made using it. So I wanted to share it with you today. I don't usually do this, but Jeff asked me to do so. So here we go. What our criteria is for our sleeping tiger setup is we want stocks to do what we need them to do we're going to go long now, in swing trading and uptrends. So you want the stock, and we're going to look at charts in just a minute. We want the stock, maybe it's come down in a downtrend and it's basing, or maybe it's moving in an uptrend and it's pulling back and it's starting up again. We want it either in a base or moving in an uptrend, not in a downtrend. Now, we want to also see that the stock is trading, when we get into it, we want to see it trading just above, and excuse me, that's a typo. It shouldn't have had an EMA there. It's not exponential. We want to see that the stock is trading just above its 8-day moving average and its 13-day moving average. And the 8-day and the 13-day are the two moving averages, and I color the 13-day blue on my chart, and I'll show you this in a minute, that we use to get our initial setup that we're going to get into. We're going to see here that the 8-day moving average is poised to, or has just crossed above, its 13-day moving average. Okay, and I'm going to show you, we want it nested or cradled in these moving averages. This is where we want price just nested or cradled in it, kind of sitting in the middle of these two moving averages right there, not above them, down in them, nestled in them. And then if we're looking at a consolidation zone, we buy when the stock moves above that consolidation zone and starts up its 8-day moving average. Okay, so again, our goal with this trade, and it's easy to remember when all heck breaks loose in the market and you're staring at your stock on the screen, all you have to say to yourself, is my stock or ETF, is it above, is it walking up the 8-day moving average? And you say yes or no. And if your stock is walking up the 8-day moving average, you're good to go. What do you do if it's walking up its 8-day moving average like this, and then all of a sudden it rolls over? We take profits at two places here, one or both places. We take profits when the stock closes below the 8-day moving average. Okay, how do you know it's going to close below the 8-day? You look at the stock 5 minutes before the market, or 10 minutes before the market's going to close, and you see if it is still above the 8-day moving average or if it's penetrated that line and is going to close below it. Okay, next question you've got in your mind, I already know this, is you're saying, why are you using the close, Toni? I'm using the close because I've seen stocks, and you have too, fall down below the line you're looking at and then jump back up. And this could even happen during the day. So unless it's a real hard fall below the 8-day in the middle of the day and you say, well, that thing's never going to get back above, of course, use common sense, sell. But many times, if it's just a little dip below it and then move back above it, the 8-day will act as support and you're still in the trade. So we use the close. You can use whatever you want, but we use the close below the 8-day. Now, because everybody I know has a different risk tolerance, a different style of trading and thinking about the market, I offer you another protective stop opportunity. I call this the red and blue stop because, as I told you, the 8-day moving average is red on my screen and the 13-day moving average is blue on my screen. So what you can do if you say, oh, the market's just cranky, my stock fell below the 8-day, but it's still above the 13-day at the end of the day when the market's closing. You could, if it falls below the 8-day, take half your profits when price closes below the 8-day MA and leave the other half in, and then wait and see and take the remaining half of your profits when or if price closes below the 13-day moving average. And that has it's not ignoring our stop. It's just it's kept us in quite a bunch of trades that otherwise we would have been out of with this tighter stop. Okay, so let's start looking through some of these charts that I've gathered up here for you, and I've got a lot of other things to explain to you about this. Again, this is a daily chart here of F5 networks, symbol FFIV. It's a daily chart. And on this screen, and I apologize, the red turned out kind of pink on here. I should have flipped it into a redder color. But on this daily chart of F5 wet networks, you see this reddish pink line here. This is the 8-day simple moving average. The blue line is the 13-day simple moving average. Now, on my charts, I always keep the 50-day moving average. I always have it in green. And I always have the 200-day simple moving average in black. It's just the way I've always done my charts. So I recognize everything very, very quickly. Now this chart shows us, oh, and on these scales here, I've got the 14-day RSI and I've got the MACD and obviously volume below. Excuse me. Now, on this chart of F5 networks, you'll see how F5 networks came down here in September of 2017, August, September, October, and it was moving along and churning along at the bottom of this range, finally picked up, moved over the 50-day moving average. Now, what I like to have, along with stock being nestled in the 8 and 13-day moving averages, I like to have, in a perfect world, the 50-day moving average below price and rising. And I like to have the 200-day moving average under that. In some cases, it doesn't always work. And especially if you want to get an early start on a trade, you've got your firm stop in, and you say, you know what, I see the 200-day moving average overhead here. I know it's a powerful line. I know it's coming down at an angle. And excuse me, I know that this could offer resistance, but F5 can be one darn powerful stock when it gets going. So I'm going to take a chance here. And this is maybe a time when you scale in. Maybe this is a time when you buy small share size initially and then add to it if the trade goes well. And I typically do that in cases where I have the 200-day moving average overhead. So right here, I'm looking at this consolidation right here, and I'm noticing, and when you're in these consolidations, the 8 is going to bounce along sideways within the consolidation. The 13 will be a little slower coming in, but together they will form kind of a, I hate to say it, well, a nesting pattern is all I can think of here. And then you see the consolidation here. Price is all nestled in these moving averages. Then it starts to break higher if it's going to. Then the 8-day rises above the 13, the red above the blue. Price moves up and starts moving up and out of this consolidation. Now, do you know that it's going to go up? No, of course you don't. You're taking a chance here, but this is a good setup for the sleeping tiger setup, and that price is just above these two lines where it's nice to see the 50-day is very close underneath price here. So what we do is we exit in a place like this, and this is on F5 networks. This is about I'm going to say $22 here. So this little nesting and this little breakout here, good place to enter. Now you say, self, as long as my stock stays, as long as F5 network stays above the 8-day moving average, I'm good. What am I doing? I'm going to start when it breaks out. I'll trail my stop underneath the 8-day and or the 13-day moving averages. That's all I have to do. It's really all I have to do. Look at the stock. Is it above the 8-day? If the answer is good, yes, then good. And if it isn't, we get out. So F5 networks here started up. And by the way, this is a trade we made in Tony's Market Club. It did real well. If F5 network starts out here at 122 and walks up its 8-day moving average, when it gets up to a point like this, we call this liftoff. It's a term I've made up because price is trading above now. It's not touching the 8-day moving average. It's actually trading at a premium to the 8-day moving average. And now when it's rising almost parabolically, I say to myself, geez, I really don't want to give back these profits. So what you can do is if it's above the 8-day moving average, no longer touching it, you can draw your stop up to the low of each day and exit there before it actually comes back down to close below the 8-day. You can do that if you like, or you can wait to see if it stays above the 8-day. In this case, it moved down to the 8-day, but never closed below it, as it moved to the end of November. Actually used it as support. The 8 days like that, it'll act as support, and then moved up even higher before it came down to close below both lines. So this was a pretty nifty trade, and you probably, if you did this and held on to it into this candle here, you made about 8% in a couple of weeks, which is not bad, And then you could have watched it as it consolidated and then re-entered when it started back up. This is a trade that's kind of a lot more volatile, and this was probably earnings day here, but you could have pulled off a little more here if you'd gotten back in. In this case, look, F5 went up into the middle of January, pulled back below the 8-day. You would have gotten out of maybe half your position here, never closed below the 13, moved back up until earnings day. And then had a big engulfing candle. And at that point, when I saw that heading down there, I would have said, I'm taking my profits. Thank you very much. Earnings day earnings days are special, and you never know. I tell Tony's Market Club members, earnings announcements, I should say, offer risk. You can make a lot of money and lose a lot of money. I am not one myself to get into trades before earnings. It's just a lot of risk to take. You can, again, make a lot or lose a lot. I tell Market Club members, if it's a new trade we've gotten into, maybe you want to sell all, but maybe just a very, very, very small amount if you think it's something that you want to stay in. And you say, okay, Toni, well, I get that this sleeping tiger setup works on stocks. We're a little conservative in Tony's Market Club, but does it work on momentum stocks? It truly works on anything. So I'm putting in Amazon stock here, Amazon daily chart, AMZN, of course, is the symbol. And you can use the sleeping tiger setup again for, yes, definitely for the big momentum stocks. In this case, I showed you an example where Amazon was tooling along here at about $930, pretty low for Amazon through October. And then it gapped up, and that may have been, again, another earnings call, another earnings announcement. You can get into trades like this that make big breakaway gaps if you put a stop below the low of the day and make sure that it has follow through the next day. So in this case, Amazon wasn't nestled in the 8 and 13 at all, but it did gap up above it. From experience teaches me that if it breaks away and it's a strong stock and then it's powerful again the next day, it's in liftoff above the 8-day moving average. It may then start to move sideways, but you can turn this into a sleeping tiger setup. It'll consolidate into that 8-day moving average, perhaps all the way to the 13. You don't know. But then if it starts higher again, you're good. And if it looks dicey, maybe you take your profits and get out earlier. But Amazon looks strong here. We know what kind of a stock it can be. And you had a couple of swing trades here where it, again, walked up its 8-day moving average for a little while, got above it. I would have gotten out at a break below these lows here because it was trading at a premium to it, came down below, and then a more ideal spot to get into was when it consolidated for quite a while, moving upward a little bit, and then got into a real cradled itself into the 8 and 13 and then started up, broke above prior resistance and started walking up that 8-day line. That is a great time to be in it. And of course, as of last night, when I captured this chart, Amazon was trading way, way, way up here, way at a premium to its 8-day moving average. Now, when it gets to a premium to its 8-day, because the 8-day is so tight to price, I do start worrying a little bit, and that's when about it rolling over hard, as it did back here. So that's when I start dragging my stop up under the lows of each candle that is rising above in liftoff, rising above that 8-day moving average, because I just want to take at least half my profits should it start rolling over at this point. At least I want to be playing with the house's money, right? Okay, so let's look at a typical trade here that we could do. What is it going to look like? What would it look like if we did a trade here? So we're going to look at what it looks like to start out making a trade and getting into an entry with the sleeping tiger setup. And for this case, I have used Halliburton. Now, we knew that a few weeks ago, oil was, or as ever since this summer, oil is starting higher. I usually keep an eye on the USO. Excuse me. I keep an eye on the USO, the United States Oil Fund. It is a fund that within it are futures contracts for West Intermediate oil. Sorry, my brain went blank there for a minute. And watching that a little bit, I thought, I bet you Halliburton could be ready to take off here. So we're looking, I kind of spread this chart out. This is a daily chart of Halliburton with the 8 and 13-day moving averages on it, the 50 and the 200. And there's a couple of examples here where you could have gotten in. Now you're going to see some strong stocks come down and make lows like this, like Halliburton did. And you could say to me, well, Toni, the 8 crossed over the 13, price is nestled right into it. Can I get in here? And the answer is yes, because you have the same, it's a little more risky because you have a lot of resistance up ahead to see if it's going to get going. But if it's a strong stock in a strong sector, then it may well move up higher. It's a little chancier, a little riskier. So maybe you use smaller share size, but definitely you're trailing your stop underneath the 8 and or the 8 and 13. So you could have gotten in here when Halliburton was what broke up at about 39. Notice the volume was strong. Notice the MACD moved up. Notice the RSI actually did a bullish divergence starting up almost before price did. So those are all good signals. And for short-term traders, absolutely, you could have gotten in to Halliburton at 39. You could have ridden it up to about 46. Fantastic profit before it came back down, got tangled up with these moving averages. Now it moved back down here to support, to price support at about 41, and I'm not drawing, which was about price support back in June. So that's good. But I know from habit, or I know, I should say from experience, that the first dip down usually isn't the one that's going to keep it going. That dip will usually have to be retested when you see what we have here is like almost an inverse head and shoulders like this, or you can call it simply a cup with a handle. But I know from experience, these kind of moves usually come back down, and it did. So that's why I wouldn't want to get in there so much. I wanted to wait for the retest because that's where the strong hands come in. And on Halliburton, you can see it moved back down to 41. Then price got nestled in here. The 8 crossed up above the 13. The pink crossed above the blue. I knew I had overhead resistance here with the 50-day and more with the 200-day, but we bought small share size down here at 42 with Halliburton. So you've got it here. We bought it here about 42.50 on this day when it started up above the 8 and 13. So you say to yourself, okay, self, now that I've got it, what do I do with it? So we've got it now. Let's say we have 300 shares of Halliburton, and we bought it right in here, about at 42.50. So now we say, well, look at all the lines coming in, look at all this stuff going on. But what is the only thing we have to know? The only thing we have to know is this stock walking up its 8-day moving average? If the answer is yes, we're good to go. Well, Halliburton, you can see through all the lines here, all through the 50-day moving average, it popped above it, fell below it, started back up, moved above the 200-day, fell back down to the 8-day, which it used as support, and then moved back up. Not once did it falter. It walked right up the 8-day moving average from $42. And as we're looking at this chart, managing risk, looking at it once or twice or 3 times a day and saying, is it above the 8-day moving average? And it's just moving higher. Very, very nice. Can't argue with this. Now, could it have rolled over and stopped us out with a profit? Yep. Could have happened, just like it did back here. But if you choose wisely and choose according to sector strength, a lot of time, you'll have more in your corner. You'll have higher odds of the stock moving higher. And in this case, that worked for Halliburton. Let's look at taking profits here, which actually, to this date, we probably don't have to do. We'll have to see what happens next week. This is starting to look a little dicey. But remember, we got in down here at 42.50. Every day we said, is my stock walking up the 8-day moving average? The answer has been yes every day. Now, as we got up here into January, and we had it since, goodness, November, we get into January, here's a day where price closed below just a few cents, but it did close below the 8-day moving average. And we should have sold, should have sold at least half of our position here, although it was just a few cents. I know some people in the market club that kind of wink and make me look the other way, and they go, oh, that was just a few cents, I'm keeping it. And that's fine, it's up to you. Notice how Halliburton moved over here and then caught the 13-day moving average as support and closed back above the 8-day 2 days later. So we weren't stopped out, came darn close, a little bit of a nail biter, but didn't happen. Then popped up higher and then made what this candle right here, which is why I say we may get stopped out pretty soon. This is a gravestone doji. A gravestone doji is a Japanese candlestick. And when the next day after this kind of pattern, okay, this looks like kind of like a gravestone, they call it, so you can imagine what that means. It appears at the top of moves sometimes, and if the next candle the next day is negative, it means it's a topping bar and can provide pretty strong resistance when price comes up there again. So we see this great possible gravestone doji. We see it confirmed the next day. We see price pulling back, and then we see another little doji the way it closed on Friday. So because this pattern is getting more volatile, because this big green candle here is much higher and taller than these smaller green candles, we say, okay, the bears and the bulls are starting to duke it out now. Now they're starting to fight. The bulls are not the only ones winning. The bears are coming in and saying you're pushing your luck. So again, as long as it stays above the 8-day, we're good. But in the next week, if it falls below these, we're out with a really, so far we have a 31% profit. We're out with a really sweet profit in the next week, even if it falls on Monday and we get stopped out. So that is how that all works. Let's keep going here. Now we can say, hey, Toni, this is all very nice when you're trading big stocks like Halliburton or Exxon or Bank of America or whoever. But what about lately we're getting into, you might be saying this, we're getting into cannabis stocks. And a lot of people are and have made good money. I've made a little money in them myself. What I like about the Sleeping Tiger setup is that it also does very well trading volatile stocks like recently cannabis stocks. They run up real far, and the trouble with cannabis stocks or stocks like these, even penny stocks, some of them, is that they run up real hard and fast, then they fall down real hard, and everybody goes, what happened? I was going to keep it forever, and now I've lost 40% of the profits I had. If you use the sleeping tiger setup for these kinds of stocks, you get out on the high side, you know the rules here, and so you end up making bigger profits. This is Canopy Growth Corporation. It's a Canadian cannabis company. They grow it, they do everything. Symbol is TWMJF. This is one of the biggest companies in Canada. Canada, of course, legalized recreational and medical use for marijuana this year. So you can see how TWMJF, you could have gotten in sooner. One entry we looked at was $16. We got in Tony's Market Club. Actually, we got in a little earlier and fooled around with it. But if you got in at 16 here, which was a nice price, is consolidating, it's nesting, it's starting to break out of the 8 and 13. Great entry at 16. Ride it up here to about 34. You say, hey, price is in liftoff above its 8-day moving average, and it was for a lot of this move here. But hey, it stayed above the 8-day moving average. That's all we ask. It fell below it one day, then came back up and closed above it. Good reason why we wait for the close here if we can at all possible. And it stayed above the 8-day and moved up to a high of about 34. When I saw this red candle, I said, I'm getting out. It's getting way overbought here if we look at the RSI. But even if you waited, you still made a great profit of about 100% if you waited till it fell down into the next day and below the 8-day moving average. So you can't argue with that. When price on TWMJF, if it starts up again and moves above its 813, it's possible we could get back in. So yes, the sleeping tiger works well for volatile stocks. It works well for high momentum stocks. It works well for stocks like utility stocks. Yes, indeed, we get into those in Tony's Market Club, and they have sold off so hard recently that if they start back up, we will use the sleeping tiger setup to buy low and sell high. Absolutely. So let me go on here and tell you, you know a little bit here, and I'll answer questions in a minute. You know a little bit here about swing trading and the sleeping tiger setup and how to use it. So let me go on and show you something that I want to offer to you today. Oh, I forgot one more thing before we do that. People ask me all the time, where do you find stocks to trade? And so I put them, I just thought, heck, you know what? Let me put up a list on my website. It's free. People can go to it. And because it'll show you the sector and the stock. So you can, I always like to know where the sector is, what position is in. If it's trending higher, then the stocks within it naturally are going to have a bigger chance of moving in that direction, especially the top 3, 4, or 5 stocks in that ETF. So if you want to know get a watch list, where to find some stocks and ETFs to trade, first of all, go to Tony, this is free, go to ToniTurner.com. On the top toolbar across the screen, click on Education. Then in that drop-down box, you can click on Sectors and Stocks, or I give you a big list of sector and industry group ETFs, which is also valuable for you to have. You don't have to wander from website to website. I give you more than you'll ever need to trade with. You can always find a trade there somewhere. So you'll have sectors and stocks. You use the sector as kind of a guideline for where your stock could go if your stock's a major component in it. Or you can certainly swing trade sector ETFs. They're good for that. So now, before we come to the end here, let me tell you something quickly I've brought with me. Now that you know more how to swing trade, and you may want to use the sleeping tiger setup and try it out, I think you'll like it. There's my brand new training product is yet another phase of trading where you spend less time researching, you spend less time managing open trades. And if you get into a stock that's a winner, and lately almost all of them have been, you make more money. Now, please know that when you hop in and out of stocks constantly, you stand a chance, because of slippage and commissions, of making less money than if you use a setup like the Sleeping Tiger setup and stay in it a little more. The longer you stay in a winning stock without getting out, the more money you make. That's a period. Instead of hopping in and out, losing money on slippage and commissions. So what I wanted to do now, and what I have done, my newest training product, is a very simple strategy of trading a trend, knowing how to do it. You can't just do it any old way. Trading a trend from the lows of that trend to the highs. You could be in it for months, which is certainly a lot easier than excuse me, getting in and out a lot. This works with some stocks, and it works very well. In this training, you'll learn exactly what and when to buy and when to take profits. Again, Trade the Trend to Profits is my newest training. It's how I make winning trades. And if you combine what you've just learned about swing trading, and then you add to your skill set how to trade a trend to profits, you're pretty much going to have most of what you need to have a successful trading career. Now, I know some of you like to day trade, and that's how I started out, and I like to do that too. But it's to your advantage to know certain environments you're going to want to swing trade, and that's if this market starts getting really funky, and if it starts selling off a little bit, yes, you're going to want to be day trading or swing trading, or even standing on the sidelines. If the market keeps trending the way it is, you definitely want to be in trend trades, because I'll show you how it's less research, less time managing trades, but your trades are working for you, maybe while you're on the golf course, but they're working safely for you. Now, it's a simple system. You can learn it easily. There are some little tricks to it, but they're easy to learn. So I can show you exactly how to add 20, 30, 40% to your gains or more if you learn how to trade the trend to profits. Plus, of course, you get a free month of Metastock with this program. So with that, I've got a couple of minutes left here. Jeff, are there any questions anybody's asked that you'd like me to answer?
Yeah, absolutely. It seems like we do have a couple of people that are trying to sign up for the offer, but we might be slowing down the website. So if that's happening, keep trying. So sorry about that. There are a lot of people here today. So we did have some questions about whether this would work on weekly charts, BC asset.
I'm sorry, can you repeat the question?
Yes. Can you use this method for weekly charts?
The method being the Sleeping Tiger setup?
Yeah. Mm-hmm.
I don't know why not. These two moving averages work together absolutely fantastic. They have, obviously, for a long, long time for me. I learned from another technical analyst quite a few years ago. We were sitting together talking, and he said, you know, Toni, this 8 and 13-day moving averages, of course, they're both Fibonacci numbers. And he said they work together better than any two moving averages I've ever seen. So I took that, I studied that, I went over hundreds of charts, and I agreed with them. And yes, you absolutely could use those two moving averages on weekly charts. And I should have said, trade the trend to profits here before we go, Jeff, that you guys, all of you today, we are not offering this anywhere else. You can receive 20% off this already low price program by using the coupon code You can see it there on your screen, capital TTMETA 18. You have to go to the link, or you can just go to toniturner.com and click on training products and find Trade the Trend to products. Or you can go to this page that we have up. You can copy it and paste it or write it down real quick. And you can see that it's https:// Toni Turner specials.toniturner.com/trade the trend.
We also had,
Yeah.
this came up quite a few times, and I apologize if we don't get to your question because we do have several hundred people here.
Okay.
But we did have this come up several times today by different people. Are the moving averages that you use all simple?
Yes, they're
or
all
are they
simple.
exponential? Okay, they're all simple. Okay. And do you want, could you possibly quickly go through like the indicators you use, maybe go back to one of the chart screens and just kind of go through and kind of talk about exactly what indicators you're using with it?
Yeah.
There we go. Perfect.
Okay. All right. So I didn't, because this is a short program today, I didn't get into all of the indicators. As I mentioned before, you know now that the pink or the red line is the 8-day simple moving average. The blue line is the 13-day simple moving average. The green line is the 50. I always want to know where the 50-day is because that's what institutions watch. And if they watch it, I watch it. As well, same thing with the 200-day moving average. Now, on this screen, I also added the two indicators I'm used to looking at, which are the 14-day RSI, which is this line right here. And as you know, if the 14-day RSI gets overbought, like it was back here, it moves up over the 70 line. And that means that it is, just as stated, overbought. Too many people own it. I call it too much chocolate. You know, one piece of chocolate is good. You eat the whole box, you get sick. Well, up here, we've got too much chocolate when the RSI gets overbought. And it's absolutely beautiful. But when the RSI is overbought, price is moving up at high liftoff over its 8-day moving average. We get a red candle here. I say, okay, we're pushing our luck here. And in the short term, I would take profits. Now, the MACD down here is a slower moving indicator. As you all know, it's a trend following indicator. So it's not going to roll over with this move up here. So I'm watching the RSI, which is faster, with a parabolic move to see where I should get out. But as I said, easy way to do it is just keep drawing your stop up underneath the low of the day. Just keep drawing it up. And when that stop gets hit by price, get out, take your profits. I always say, look up, say thank you, and hit the sell button. The MACD is slower here. So in a stock like this, I don't take it. I don't watch it and say, give me a signal MACD, because this is more for a Halliburton than it is for a cannabis kind of a volatile stock. So and then of course I love volume, always love volume. I want to see if there's people at the party, if there's nobody going to the party. If there's people there, then I'll go too. More questions?
One more, is I think what we've got time for. Do you, in the Market Club, do you talk a lot about sector analysis? And do you review sectors? Do you give out recommendations for things you're looking at? That was a question we had a little bit earlier.
I love sectors because they help me. And yes, I watch sectors all the time. And yes, we discuss them in the Market Club. You know, recently you may have noticed that because the Fed's raising interest rates, utilities, telecom, and REITs have been going down, down, down because people are selling utilities, telecom, and REIT because they're bond-like stocks. They usually pay very, very nice dividends, and people are saying, oh no, if U.S. bonds are going, if interest rates on bonds are going higher, I'd rather have bonds because they're supposedly the safest place to be, U.S. Treasuries. And but at some point here, In fact, I talked yesterday on the Market Now, which goes out to my list. You can sign up for it. It's my free video newsletter. And I'm watching telecom here, and telecom is actually starting to consolidate. And I'm looking for a move up in telecom, and I'm going to use trade the trend to profit strategy if telecom breaks higher here. Utilities acting like they kind of want to break higher here. I know that a lot of traders in trading rooms like to use high momentum stocks, and that's all they trade. Well, in Tony's Market Club, we quietly make very good money trading less momentum, trading a little more conservatively, I'll put it, but maybe with not quite so much excitement. So, yep, I'm watching those three sectors right now, and my people are all now at the bit right now going, Tony, when do we get into utilities? So
All right.
we got to get the right time for it. But yes, the answer is yes.
Unfortunately, I think that's all the time. We did get a lot of comments, Tony. You did a great job. I really appreciate your time today. And I just reposted in the chat the special offer. So if you want to get that, I would recommend it. Tony's so awesome in what she does and kind of that kind of stuff. So in any case, Tony, thank you for your time this morning. We appreciate it.
Thank you, Jeff. Thank you for inviting me, and y'all have a wonderful week next week. Thank you for coming.
You bet. Thank you, Tony. All right, moving on. A lot of really good comments. I'm glad we're off to, well, aside from a little bit of a time zone issue with the scheduling of the webinar this morning, we're off to a fairly good start. So I really appreciate you're all coming. I'm not from down south. I just talk like it sometimes. Anyway, that was Toni Turner. So today we are going to be doing some promotions on Metastock. If you're not familiar with Metastock, well, we're going to talk a lot about it today. So Don Fish, we're going to also basically be giving you, and we're going to have, the next speaker is going to be Don Fishback. He has an add-on for Metastock that hopefully I'll have a little bit of time to show you after his presentation. But we're going to have Don Fishback, John Bollinger, on, and they're going to be talking about their add-ons for Metastock. And I'd recommend both of them, of course. We have a special today for like $399. We're going to give you $921 worth of value. You can get Don Fishback's add-on, John Bollinger's add-on, 3 months of access to the Bollinger Band Toolkit 2.0, 3 months of Metastock training that I'm going to be doing right after Valentine's Day in a few weeks here, and a course. So Metastock, as I said, we're going to be talking a little bit more about it today, but it's been rated #1 literally 24 times in a row. It's a great way to try it, and it only costs about $399. You can call us. We do have reps that are here. It's 800-882-3040. And of course, I'm going to talk about Modern Trader. We really appreciate them sponsoring the session. You're welcome. Thanks for all of the great comments, by the way. Modern Trader is sponsoring the summit today. We really appreciate that. They've been publishing since 1972. They feature every month. They send out a magazine that features market perspective, insights, and recommendations. And it's a program that's, or a magazine that's built for traders. So they're offering a free month, no credit card required trial. And to do that, you'll just go ahead and go to the link that I'm going to go ahead and type up in the chat box for you in just a second here. So let's go ahead and kind of keep things moving now.